Hello everyone, welcome to the Ichimoku charts.com stock analysis for Wednesday, November 14, 2012, and today we're going to have a look at some stocks of interest on a daily basis and also look at them on a relative strength basis and an Ichimoku charts basis. So the first that I'm going to look at the moment is a stock that's been performing very strongly, and a stock that hasn't really participated in this sell-off that we've seen today. We have its Lowe's company's code LOW. Bullish market in the long-term time frame, broke out quite some time ago in September to the upside above the cloud and still trading above the cloud. But now just trading below the Kijun-sen and Tenkan-sen. Looks like it could be forming a head and shoulders pattern if the market takes out an area just down below here around 3140. That will be potential head and shoulders pattern and potentially strong downside. But if we look at how this market's been trading over the recent past, it's looking quite strong. It's trading well above the one standard deviation Bollinger Band for the relative strength, and the relative strength to the S&P 500 is the blue line here, and that's been outside of the Bollinger Band for quite some time. And even today, with the market selling off quite strongly, it hasn't sold off as strongly as the market and is quite a strong stock and could end up rallying back up above the Kijun-sen and the Tenkan-sen. Another stock that's been quite strong lately is Yahoo. The code is YHOO, trading above all three indicators, trading above the cloud, the Kijun-sen, the pink line, and the Tenkan-sen, the green line here. And both of these indicators are pointing up quite sharply, reflecting good solid upside momentum. If we look at the relative strength here, the blue line, it's been trading above the one standard deviation Bollinger Band for quite some time, and is a sign of quite a strong market in relative terms, and a market that today in a strong sell-off has a spinning top type candle, could retrace but should find support around the green line, the Tenkan-sen here around the $17.50 level. Next, let's take a look at J&J, Johnson & Johnson. J&J is the code. Trading above the cloud, but now trading below the Kijun-sen and the Tenkan-sen, but on a relative basis not as weak as the overall market, and has potential to bounce off the cloud if we do see strength coming back into the market. H.J. Heinz & Co. has been quite a good performer in the recent past, code HNZ, bullish breakout above the cloud and still trading above the Kijun-sen and the Tenkan-sen, and found support at the Tenkan-sen today on an indecisive candle. Very strong overhead resistance in a zone up to 58.45, but solid support at the Tenkan-sen and Kijun-sen, extending down to around the 57.30 level. But if we look at this relative strength, trading well above the one standard deviation Bollinger Band of relative strength, so very, very strong performer, outperforming the overall market. We'll just take a quick look at Apple. AAPL is the code, and a very, very weak market, trading below the cloud. We had a very bearish breakout down below the cloud. The market attempted to rally back up towards the cloud, found resistance there and sold off in a very, very strong and decisive manner. Second time frame downtrend, with the market making a series of lower peaks and lower troughs, rallied towards the Tenkan-sen to try to find resistance there, and it did, and the market sold off once again, trading below all three Ichimoku indicators. So a very, very weak market. And if we look at where this market is trading on a relative basis to the S&P 500, certainly strongly underperforming the overall market. Not a stock that you really want to be in the short-term time frame. Now, comparing that with Google, if we look at Google, Google is also trading down below the cloud and the Kijun-sen and the Tenkan-sen, so a bearish market in all three timeframes. But if you look at where it's trading on a relative basis, it hasn't been as weak as Apple, and we can see that on a relative strength basis, it's trading within the Bollinger Band, so really not performing as weakly as Apple, only just underperforming the overall market. A stock that's very strongly underperforming the market as well is JCP. Very strong breakout down below the cloud, and this highlights how well the Ichimoku indicators can be used as indications of weakness or strength in a market. A very strong breakout down below all of the three indicators, and has never really attempted to rally, finding resistance at the Kijun-sen and Tenkan-sen as well. If we look on a relative strength basis, a breakout down below the first standard deviation in relative strength terms to the S&P 500, very strongly underperforming the whole market. Certainly not a stock that you'd like to be in. And now Merck on a daily basis underperforming the market. If we look at here in the recent past, this market was performing quite strongly. We can see here for quite some time the market was trading up above the cloud, found support at the cloud, and then over the previous week or so has broken out to the downside below the cloud, attempted to rally back in the cloud, and has been rejected strongly from there, trading below all three indicators. And now if we look at the position of the relative strength, the blue line here, it's trading below the one standard deviation Bollinger Band of the relative strength, and it does suggest that this market may be destined for lower prices. We do have potentially strong support just below where the market's trading, just around this 42.60 level, so that is an area where we could see some buying coming in. But if it trades down through there in a bearish manner, the market could end up trading down to around the roughly around the 41 level fairly quickly.